FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, the global system is really the global financial system often seems to be hanging by a thread, and yet they keep it going. It keeps going on. The dollar is still king. Well, what is really happening? You know that when you listen to FSN, you listen because you want to get a behind the scenes peek at what they're not telling you, what they don't want you to know. And somebody who has been at the forefront of this is our good friend, Lynette Zhang. You know her well. You find her at itmtrading.com, where she has been the chief market analyst for a long time. Not that long, but relatively long. Lynette, we love having you on the show. It's great to have you back. So the global financial system, the dollar, which I always refer to as the Taj Mahal of Baltimore. What's going on here? Should we?
Well, first of all, thank you for having me on, Kerry. It's great to be here today. And really what is happening in the global system is that they're losing control of it. The global central bankers, as we've seen with crazy swings in the financial global plumbing, the repo market, which a lot of people put their money in money markets because they think that's a safe place to hide out and that their principal is secure. What they don't realize is that the money that you deposit into the money markets fund, well, up until, the mid-September anyway, when it started falling apart. But that's where they get a lot of that short-term money. And so, the plumbing has some clogs, we'll say.
That is a great point that I haven't heard addressed by others, is that all that liquidity that gets sucked up in the repo market, besides what the Fed does, and they do what they do, we know that, but the private repo market, it just has it just is reminding me of MFS Global, the way that it just all disappeared. And it makes me wonder, maybe you have an insight you can share with us, that perhaps there's a couple of banks, one or more banks, that have already failed. And because the last time we saw this happen in 08, 09, the banks didn't trust each other and they wouldn't take the collateral. Who knows who owns it? It could be like a Chinese company, and they cross-collateralize with so many different entities, since there's no physical certificate that actually gets passed from institution to institution. Like in the good old days, you'd be down in Wall Street and half the people there were messengers dropping off securities back and forth. There's no corporal existence of securities now. Is it possible that a bank has failed and they're just not telling us?
Well, for one thing, with all of the big derivative bets and the level of leverage in the system, frankly, they've all failed. And there's a huge, oh my God, there are so many things that are happening with the banks. But just to kind of stay on the repo thing for a minute, JP Morgan Chase, the documents that I read said that they were really a key responsible bank for the freezing of the repo markets. And you made a huge point, which was the level of confidence bank to bank, which is also what happens in those repo markets. It was a bank to bank kind of place, or bank to hedge fund, or bank to whoever needed short-term liquidity. And when those markets froze, JP Morgan was really instrumental in that freezing by, if I remember this correctly, about a third of the repos that froze were because of JP Morgan. And let's face it, they are, a systemically important global bank. And we can't forget that all banks are interconnected through all of these products. So when the regular repo market froze, that also showed a level of loss of confidence. And that's the only thing that's holding the system together is confidence. Consumers must be confident in their income to go out and spend. Banks must be confident in order to lend. And we must be confident in the central banks and that they, number one, I mean, this is insanity to me, but they know what they're doing, which they don't. It's all experimental. Right? And that if they tell us, well, I mean, this one kills me, but I got to say it because this is what's going on out there. Globally, the people, the masses, do not trust the central banks to generate the inflation that's going to, quote unquote, save the system. Oh, my God. That's probably the biggest one. Can these central banks, I mean, you and I are probably in a similar generation. I remember when inflation was a dirty word. Now it's going to save everybody. It's too late and it can't. So the big problem that I see is the loss of trust and the loss of confidence in the public. And that's why the central banks went in and they are in there now. Look at the Fed's balance sheet, was going down a little bit because they were trying to quote unquote normalize. Now it's just going almost straight up again because they don't want you to know that the money markets that you're putting your hard-earned money into are failing. Just like 2008, what was that? The Prime Reserve Money Market Fund, or I may not have the name exactly right. Do you remember that one?
Of course. There were a number of money market funds. I think there's people who still haven't gotten their money back from those money market funds. And that was... Well,
not 100%. Yeah.
Not 100, all their money. And that was like, until that point, there was never any question of confidence in a money market fund because they were invested in extremely short-term treasuries and they liquidated them when there were redemptions. And otherwise, they kept a small amount of cash and everything was always fully invested. And you got your couple of % return and that was that. And then all of a sudden, it wasn't that. And then... Well,
that was the perception. So you're right. It never was that, but that was the perception.
Yeah, that was the belief. And that's what, it's like this is like a country Western song where the woman is always abused by the cheating spouse. And the only thing that keeps her there is that he comes back every night or so with his paycheck and, buys groceries for the kids. But in reality, there's the only confidence that's there is because there's no alternative, right?
Or people feel, and you're right, that's a great analogy because it's true. People don't think they have any other choices but to give their money to Wall Street and to hold their wealth in Wall Street products. And that is 100% not true because all of that is based on a contract that you did not write, you did not read. So whose benefit is that really for? And the alternative is good money, gold, and silver, physical in your possession that runs zero counterparty risk.
Yep, which is why you need to go over to itmtrading.com and find your alternatives. They're out there. So now we get into the stock markets, and the stock markets, they've just been kind of held up like on a cream puff of air, just an air pocket. They just keep going up because, again, where do people put their money? Are you going to go buy government debt? That's in Europe, it's yielding negative, and here in the U.S., it's probably negative real rates. But yet, the people with all the money, they got no place else to put it, so they're putting it in the market, right?
Exactly. Stock markets, bond markets, and, probably even worse than that, they are trusting institutional investors. Those are people that invest your money, and because they're going out for a reaching for yield, they're going into less liquid. In other words, can't sell it when you want to, and more dangerous and risky I hate to call them investments because they're not investments to me. And the leverage loans, the leverage inside of the system is ridiculous. I was just reading over the last several days, I've been reading the most current global financial stability report from the IMF. And frankly, it really is all about the leverage in the system that they're talking about and the danger and the threat to pension plans and retirement plans because people don't understand what their wealth is actually put into.
Mm. Yeah, so you talk about it should be the global instability report. I mean, this is where you go to the Nassim Taleb black swans circling, maybe bouncing into each other. It just takes one of them to for this to go critical, like a nuclear power plant or like a stockpile of plutonium. It isn't cooled off properly, and all of a sudden it hits criticality, and then the whole thing melts down. And
that could actually happen with the money markets, because just because they're pumping in as much as the banks want, however much you want, we'll give you. And that's all, that's not all new money, but most of it is new money plus reinvesting the runoff and the dividends. But this problem is not solved because the interest rates, which are held artificially low, but the interest rates in the money in those repo markets, the overnight market, not what you or I would get, mind you, but what the banks would get, like JP Morgan lending out, are still seeing spikes. And the first spike was mid to the end of September, and they're still having that issue. Yeah. So that black swan event, if people actually understood what was happening in the money markets where they have put their hard-earned money, if there was a run on the money markets, yes, they would use the new tools that they put in since that prime reserve fund crashed. So the fees and the gates and whatever they can do to discourage you until they actually freeze redemptions, which I'm kind of seeing a lot more in different hedge funds and mutual funds globally. So not as much here, but I'm seeing a lot more funds freezing redemptions. So I don't know if this is a new trend, but it could be foretelling of something really key in here. But I think that black swan could be the loss of confidence in the money market funds. If people actually understood what was happening, we would already be there.
Yeah, well, my friend Daryl Schoon, he calls the repo market the pawn shop for banks. They get to pawn off all their collateral, and it's really a discount pawn shop. The pawn shop will charge you 1.5% interest per month. These guys are paying like 1.5% interest per year. So, and then they
and we're loaning them that money below that.
I know. So you can't. How do you lose money? How do you lose money on that, Lynette? I don't understand. But yet the one thing I've come to the conclusion with global banks is they're in the business of finding new and ever more creative ways to lose a lot of money and to wipe out their shareholders, and they never fail to perform. I mean, when you look back, so we had the S&L crisis and then the foreign loan crisis, and these banks were all insolvent then, and then the government let them do a carry trade, where this is much like a carry trade when you get down to it.
Exactly.
It's a guaranteed profit. They're not calling it a carry trade. So is this what we've been waiting for?
They're not calling it QE either.
Yeah,
but if it walks like a duck and quacks like a duck and lays eggs like a duck, probably a duck.
So it's QE4 de facto, right? But that's a toxic.
I mean,
label.
I don't know that they, but there's an interesting thing that's happening with all of this global QE and the interest rates really low. And don't hold me to a lot of this because this is something that I'm about to dig into more deeply. But the Bank of Japan, who has been huge on negative rates, I mean, I think they've probably issued more negative rate bonds than anybody else and bought them back, but themselves.
Yeah.
But they're trying to push up the long-term rates and push down the short-term rates. That's called yield curve control, even though their yield curve actually inverted, a month-ish or so ago. I did something on it The timing is a little bit of a blur, but within the last couple of months. And so now what they're trying to do is straighten that out and get that longer term yield higher than the shorter term yield. The question is, what does that do to all of that debt that was based on those lower yields?
It's going to knock the hell out of it.
Exactly. And where's all that debt being held? In their pensions? A lot of it.
Yeah, well, they're going to hold it for 30 years. You know, I was watching a video by somebody, and I can't remember his name, but his contention was that what caused the financial collapse of 0809 was the mark-to-market rules that had never been used before. Huh. And all of a sudden, they marked everything to market. And when there is no market for mortgage-backed securities, what is something worth when nobody wants it? You know, it's basically, exactly. You want to know what it's worth, just go outside for garbage collection day. That's all that stuff that nobody wants, that literally we pay the government or private hauling companies to take away. And that's kind of what the balance sheets of these banks are all about.
Yeah, except for all those illiquid, what they call assets. Mm-hmm. I'd say the first part, not the last part on there, that the central banks have bought off of the banks that there's no market for, but guess who's responsible for those? Yeah. Taxpayers.
Well, interestingly, I've never seen an analysis of the mortgage-backed securities bailout that took place in 08 and 09, but real estate markets recovered, and they were making money off these foreclosures, many of them, these banks. I don't know if they got to keep it or the Federal Reserve did. Nobody
got it.
Yeah, no doubt. And actually, those things became worth something, but it took years for it to happen. 5 years.
Okay, there are a couple things. There are a couple things about that. You know, number one, it's the perceived value of them being worth something, right? So there really is the government, the Federal Reserve is really the market for them. And even though presumably they've been selling them off or allowing them to mature. Okay, if you look on the Federal Reserve Fred website, just anybody can Google it. It's open information, and look up the mortgage-backed MBS 5-year. What you're going to see is that once they announced that they were going to not be buying any more mortgage-backed securities, they've been buying a lot more longer-term mortgage securities. It's pretty much straight up. So the government or the Federal Reserve is actually, the last data that I saw in it, but they're about 30% in that market. So when nobody else wants, they'll go ahead and buy. And then, I don't know, they're also allowing them to use that crap as collateral for those repo loans. So
just like before, just like last time when they turned to, they became worthless. They were AAA and they became worthless. Granted, you don't have these liar loans and other types of abuses, stated income loans like you did before. I mean, that was the market. Now it's somewhat better. So what does all this mean for gold? We saw gold break 1,500, hit resistance 1,550, fall back into the 1480s where it is now. And we'll just say silver is going to pretty much over time do the same thing as gold, a little more volatile, higher on the up, lower on the down. Are we getting ready for this to break out now?
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Well, actually, yes. What is happening in the spot market, and I like to differentiate between spot gold and monetary gold because honestly, those are two way different things.
Sure.
Spot gold is a Wall Street product specifically created and designed to manage how you perceive real money gold. Because obviously, a rising gold price is an indication of a failing currency. So having said that, what's happening in the spot gold and silver market is it went up a little bit too fast, right? And it's just working off that overbought, technically, that overbought circumstance. However, there really is, once that's worked off, there really is no resistance until we get to 1800. So they've already, there was a gap, right? In other words, a gap, when you look on a chart and you see a gap, it closed at one level and then the very next morning it opened a lot lower. And that was back in, I think, 13 when that happened. And so spot gold went up and is filling that gap. So, and it kind of works like this, just to help people understand that better, because I'm sure a lot of people have done this and they go, man, if it ever gets that low again, I'm going to buy it. Or man, if it ever gets that high again, I'm going to sell it, right? Yeah, so they miss that mark. Mm-hmm. But then there's an accumulation of buy and sell contracts in that level. So when I say working that off, that's what I mean. It's kind of like it dips into that pool of sell contracts and that puts some downward pressure on it. And then it goes back up and it does the same thing. When that pool is worked out, that's when it'll break to that next level. I see no resistance there till it hits 1800 and then beyond that 1900, and then it's going to break out and go to new highs. But that is not, frankly, why I personally buy gold. And I do not trust, well, look, I'm an ex-stockbroker and an ex-banker. I understand their language and I look deep at what they're doing rather than I listen to what they're saying and look at what they're doing. And so you're not going to see the real value of monetary gold express itself until the central bank or the government is ready or loses controls, and the markets, and that's could even be a little bit more likely before we have the final reset. But once they lose control of that or people lose confidence in them, then you'll see it express go way past 1900 because that's chump change to its real value.
Yeah, well, the money supply now compared to, when it hit 850 is many multitudes higher. So seasonality, we usually see gold start heading up Q4. We're in Q4 now, and you're thinking end of the year rally here. What are your thoughts?
Oh, yeah. I mean, I think it'll cut through that 15 I think it was 1550 is the current resistance level. And I think it'll go right through that. I mean, just take a look at what's happening with the markets because they aren't grinding higher, even with all of this debt.
Yeah, very true.
And, I mean, they're pretty much where they were a year ago. They're not grinding higher. Yes, from January 1 of this year, they're a lot higher because of the central bank pivot. But, I'm seeing a lot of central banks, including our own, with the inverted yield curve, which even though they never talk about it now, and they think, the only yield curve that matters is the 2-year and the 10-year yield. Well, that inverted, just because they've managed to push the 10-year rates up and the 2-year rates down, so it's no longer inverted.
Not flashing the signal anymore.
Yeah. Hello. Yes, exactly.
Yeah,
there's so many flashes that are going on.
Yeah, they totally painted the tape there, like they like to do with gold. You just watch gold like the last week and the last day of the month and the last day of the month and the quarter, and you just know what's going to happen. You don't even have to, you can close your eyes and you can see the chart and you know exactly where it's heading, like non-farm payrolls. There's absolutely no reason for non-farm payrolls to affect the price of metals. No rational reason. It's a total non sequitur that we've been programmed to expect. Oh, jobs went up 130,000. Supposedly, actually, the survey of jobs went up 130,000. We have no idea whether jobs went up or down, but the survey looks good. And therefore, gold gets hit and stock market goes up. But the causality just really isn't there. So I find all this fascinating.
Well, they're counting on the consumer.
Yeah.
Right? They're counting on the consumer to keep shopping.
Right.
Because so they need the wages to go up. They need more people employed because they need us to spend money. We are a consumer-driven economy.
Totally.
So
truer words.
Yeah.
So gold and basically, what about cryptos? I believe in cryptos, but I'm a skeptic at this point in cryptos because they're just so easy to rig. I mean, I don't even know how to do this stuff, Lynette. I've never been a trader, but I knew I was at a Bitcoin conference and I'm listening to a bunch of people who were definitely didn't know as much about economics as I do, talking about, well, at 10 o'clock tonight, we're going to buy this crypto, like a few hundred of us, crypto I never heard of, and then we're going to dump it. And it's like, if this was a security, they'd be leading these guys out in handcuffs, but because it's a kleptocurrency, it doesn't matter, right? I mean,
yes, but if it was a security, they'd let them get away with it for a really long time before they took them out in handcuffs and make enough money for the bank or whoever it is that they work for. Sorry, I just wanted to clarify that.
Yeah.
But this is how I feel about cryptocurrencies. At this juncture, they have zero utility. Mm-hmm. What do you use them for other than trading? They create a false market so that they can do just what you talked about, drive the price up and then dump it out. And, and the naive person that thinks that this is like gold because that's how they're sold.
Yeah, I know.
Going around the system. They don't go around the system. They're in the system.
Correct.
And so even though I know, there's not one doubt in my mind because they're working on it really, really hard, that we're going to be in a digital currency, it'll be a digital fiat currency.
Correct.
And if the central banks can maintain our confidence in them, then it will be controlled by them and the central banks. But it will not, it's not going to be Bitcoin. And it's not going to be one of these offshoots or these private
Won't be Ripple?
currencies.
You don't think it'll be Ripple? Huh?
It's not going to be Ripple.
What about Raven?
It'll be blockchain based.
Yes. Agreed.
Right?
Agreed.
Definitely with smart contracts on there because, hey, it's a contract that you aren't going to read.
Yeah.
And because they are infinitely divisible, when they shift us from a debt-based system like we are now, I read constantly. So interestingly enough, I just read a paper by the San Francisco Federal Reserve, really talking about how negative rates are really they can be a lot lower than we realize because we used to think it was at zero because people would park their money in cash. Well, they've discovered, thanks to Japan and Europe and all those guys, that it goes way beyond that. But when you're in a digital currency, it's infinitely divisible. So just as inflation was a tool for them to rob us of our purchasing power value of what we work for, because we work for that money, the crypto, and do it reasonably and visibly. I mean, I don't, people might notice it or they might not notice it, but that's by design. So they have, I was just looking at the purchasing power chart last week, and, we have something like 3.7 cents left out of the original purchasing power of the dollar. The digital currencies will enable them to do that same thing and attack your principal at a level that you can't see it because it's infinitely divisible.
Oh, you're so spot on here, Lynette. It is so spot on. And, it just reminds me, I saw a bumper sticker one time and it said, "Don't steal, the government hates competition." And then you could have just put in there, "Don't print money, the government will throw you in jail because they're the monopolistic counterfeiter." And this is just another means, as a Rothbard would have said, for them to counterfeit money because it has no value. And I go back, there was a Murray Rothbard lecture where he was talking about, let's say I create a currency and I call it Rothbards, and you decide to accept it because you think it has value. And I'm saying, my God, he was like 50 years ahead of his time, because if he was alive now, he probably would be peddling Rothbards.
Or Libra, which is now Libra. Getting,
Well, they seem to have pulled the plug on that. Anyway, we've got to wrap up. So,
wow.
So what's our time frame? What's our time frame here? How much time do we have to act?
We can keep going if you want. I mean, I can't go all day, but I can probably go another 15 minutes.
I've got like 2 more minutes. So,
and I would like to stay on the Libra on that topic just for one more second.
Absolutely.
Because the Bank for International Settlements, I just did a piece on this recently, but the Bank for International Settlements had this great graph or spreadsheet where they took all of the benefits of the private cryptos and the drawbacks, and all of the benefits and drawbacks of the private banking sector. And miracle of miracles, if you got rid of all the drawbacks in each one of them, you had perfect synergy. So the reason why I brought up Libra is not because I think that's great, and certainly Facebook, there's 47 states now going after them for antitrust. But my point when I was looking at that and what I saw when I did that analysis is they can regulate them into a merger of the best of both worlds. Because what does Facebook have that the banks don't have? They have a huge, broad reach of data.
Yeah.
They know everything about you. They know so much more about you than the banks.
Even if you don't subscribe, right? Even if you're not a Facebook subscriber, they know all about you because they've got all of these cookies and worms on your computer now as we speak. They're probably, they're not monitoring us because they just don't care. But Libra to me, and they've got so many millions of vendors and so many millions of customers that for them to print up Libra and they're transnational, this is like, it kind of has to be stopped. It's kind of frightening to think you're going to give one guy so much control and he's just going to tie it to a basket of currencies. But eventually that basket of currencies will be tied to Libra if they let him execute his plan.
Well, if they execute their plan, what they'll do is they'll absorb it.
Yeah.
The Federal Reserve, the central banks, will absorb that and therefore have easy and ready access to all of that data.
Yep.
That's way scarier to me. I mean, look, I don't like what they're doing, and I'm of an age where I like my privacy. However, the scary part is what I see in the future is a merger between high tech and all that big data and the government and the central banks and the banks.
Hey, I would just point out one thing, that DARPA, that's the Defense Advanced Research Project Administration or something to that effect, I don't remember the acronym that well, was working on something called LifeLog. And I think it was on February of 2004, they ended that program. The very day that they ended that program, Facebook was incorporated and born. And that's just too big a coincidence for my liking. So for them, just like the same thing like Amazon, for them, they're already part of the government. We just don't really hear about it. Anyways, we got to go. But the best place to find you is itmtrading.com, correct?
Yes. Or, I produced 2 research pieces and a Q&A on YouTube, itmtrading.com or YouTube ITM Trading.
That's your channel. ITM
and they can also
Trading.
call us because we like human contact at 888-696-4653.
Or 888-OWN-GOLD. I like that better.
Yes. Okay.
And you could talk to live people. Imagine that.
Imagine.
Who would have thought? That's such an innovation. Yeah. Well, Lynette, it's been a pleasure. Hey, you guys got to have opinions, questions. where you think the global monetary system is heading. Do you think it's just going to be one big Libra, or are there going to be others? Just email us, kl@kerrylutz.com. Check out the Twitter feed @KerryLutz, Facebook page. We do have one, believe it or not, Financial Survival Network. And, of course, the website, financialsurvivalnetwork.com. Check it out. Hey, Lynette, it's great reconnecting with you. We'll talk to you again real soon. Keep up the great work.
Thank you so much, and the same to you. It's a pleasure.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.